Vaibhav. In today's session of Visual Jforex, we will be continuing our work with the indicator named Chande's Momentum Oscillator CMO, and then this is going to be the last session of this series. And I hope we will be able to complete the algorithmic setup using this indicator today itself. So let us get started. On the Visual Jforex board, which has been developed by the Dukascopy Bank SA, I had done this instrument subscription where the default instrument is Euro USD and the position amount was defined at 0. Then these 4 hourly CMO blocks were taken into consideration along with the hourly time frame blocks as well. And to look at the price volatility, these get historical candle of the hourly time frame along with these candle cluster of 4. These are also of hourly time frame were also brought in, and after that these calculations were carried out to define certain conditions, and accordingly the conditions were set for the execution of the buy trade. In today's session we are going to be focused on the requirement for the execution of the sell trade, and also one variable needs to be defined, is order validity. This will also be done today itself. So now let us get started. I will explain to you the logic briefly, how it is going to happen when the sell trade will be placed and what are the conditions which need to be in place. This is the Euro USD chart, which I will change to the hourly time frame, and here on the lower side I have plotted the CMO indicator with the default period of 14. And first thing we do for execution of the sell trade is we look at the price momentum on the larger time frame of 4 hours, and here we need the CMO value to be in decline and below 0, and if the value is above 0, that means the momentum is not really bearish and this might not really be the time to look for the shorting opportunity. So for as long as the CMO value remains above 0, the short sell trades will be avoided, and as you can observe on the chart, that's a good decision here. Our algorithm would not have gone in for any sell trade as the momentum on this 4 hourly time frame has remained bullish and the CMO output has remained above 0 for all this time. And prior to that, when the underlying instrument was in decline, here you can observe that CMO values were consistently below 0, and whenever we had this opportunity when the values were on decline, the algorithm would have looked for shorting opportunity. And so we look for this time frame starting from around 22nd of March and extending all the way towards 31st of March. And after this 4 hourly condition is satisfied, we look for this hourly time frame requirement where the initiation of the trade will happen only when we have the CMO value dipping below 0 from above 0. So as and when that happens, so the trade order will be placed, and I think this is happening around 7 GMT, 23rd of March, and after that I'm sure some couple of other instances might have arisen. So on those times the algorithm would have looked for execution of the sell trade provided all other conditions were in place. And after that we also have to make sure there is enough of price volatility. So for that, the closing value of the last hour should be at least more than 20 pips below the highest value of last 4 hours. So that calculation we are also going to carry out, and we will set this condition that is going to ensure that there is enough price momentum and we are not really going for the trade when the instrument is sideways and it is trading in a narrow range. So this condition will come handy to define this price momentum requirement. And after that we will turn our attention to the other conditions also, and I will explain to you those conditions while adding these logical requirements on the Visual Jforex board. So first thing we will need to do is get a couple of calculation expression blocks, and here I will have to deduct the FHL candle close from the FHL candle high. FHL is this array of data, and we will be using individual variables. So let us get started. Components, mathematical, and in that this calculation expression will be quite useful. High and closing value A1 minus A2. This will be sell side minimum requirement. I will disconnect it and join this block. So this needs to be more than the minimum defined difference of 20 pips, and the order will be placed above the current price, and which will be 30% higher of this difference. So for that, again we are going to need to carry out fresh calculation. I think we will need two calculation expression blocks. So whatever is the difference, we will take 30% of it. We have already defined a variable which is BE, which has the value of 0.3. Okay, so we multiply SMR by BE A1 into A2, and this will be sell side pending order requirement. Okay, and we add this value to the last tick price. This will be A1 plus A2, and this will be sell execution price. Okay, so in this session these three values have been defined, which will help us in defining the conditions prior to the execution of the sell order. So again I will join it back, and we will have to, I think I will join it, but again in the latter part of this session we will have to add a couple of calculation expression block for defining the order validity. So for the time being we get started with defining of if conditions, and we will carry out the calculations later on. If blocks, I will take 6-7 of these in one go. And the conditions are fairly simple to understand, simple to define. All we need is the CMO value of 4 hours to be on decline and below 0. So first we will check whether it is below 0 or not. and it should be, that means first input is less than second input, then we will compare these values in between themselves. First input less than second input, and last for our CMO value should be lower than the CMO value of prior 4-hour candle. That means CMO 10 needs to be lower than CMO 18. So again, first input less than second input. Then we turn our attention to the CMO values of the hourly time frame, and here the CMO 20, which has a lookback period of 2, it should have been above 0. First input greater than second input, and CMO 19, which is last hour's output value, should be below 0. First input less than second input, and after that we are also going to take a look on the price volatility, whether there is enough of momentum or not. And for that, this calculation which we carried out, SMR, needs to be compared with the minimum defined condition, MP. Okay, so with that, this condition that there should be enough of price volatility more than 20 pips, first input greater than second input. All right, and then we also want to make sure that the last hour's closing value was below its opening value, and for that candle 21's closing needs to be below its opening value. Candle 21 close and open, first input less than second input. So as I see, we have utilized all of these if blocks, and I think we will need one more of it. First input less than second input, and then it is going to be the turn of this get historical candle of 10 seconds each. And in both these cases, again, we are going to need candle 21's closing level. And candle 24 and candle 25 close. Okay. So candle 24 close needs to be below candle 21 candle close, and candle 25 candle close needs to be above candle 21 candle close. So in this case, first input less than second input, and in this case it will be first input greater than second input. I will bring in the pending open block. And this will be a sell limit order. And the price has been defined here. Okay. Trade amount I will change to 0.1 million. Slippage will be 2 pips. Stop loss is going to be 15 pips. And take profit 30 pips. Then comes the question of defining order validity, which we will do shortly. I think order validity of 2 hours should be good enough. Prior to that, we will arrange these blocks, and we will also have to make sure that the conditions are symmetric. And we now turn our attention to the defining of order validity. For that, new calculation expression block will be needed to be added. And it is pretty simple to define. All we need to do is take last tick time and add 3.6 million ticks multiplied by 2. So I will create two new variables, one with the value of 2 and one with the value of 3.6 million. We will define it as tt, and this will have the value 3.6 million. I think I'm right. You can point it out if it is wrong. And to give us the flexibility of changing the order validity, we can always create a variable and define or assign the required value. If you want to keep order valid for 2 hours, then the value should be 2. If you want to keep it valid for 3 hours and so on, you can assign that much value. So in this time, the value is going to be 2. And oops. Okay, so it is going to be a1 plus a2 into a3. And one more aspect is that we have to pay attention to make sure that the data type matches with this variable. So this needs to be in the long data type, and for that reason I will create the variable here. I will name it OVT and derive its value from the calculation which we carried out in this block, and same value will also be assigned for this block of the sell side. Okay, so here I think we are good now. I will join this block. Now these two blocks need to go where they belong, and that is on their respective sides. So with this, the algorithmic setup is complete, and I hope you have been able to understand the logic and the execution of it. And you can build it by following the instructions provided, and then testing on the historical data on the Jforex platform, where you can determine its efficiency and whether it is profitable or not. So you have any query or any idea to share, you can also provide that in the feedback section. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market development. See you next time. Till then, goodbye.